I think there are a couple of implications from this. I think the first is if you want to be a bank that's in the retail sector of the market and you want to compete with some of those big four companies that we were just talking about, you really do need to have scale. Scale seems to really be working for the first time, at least in our observation in the banking industry. It's been talked about, but the bigger banks have been more profitable more recently. And this merger is all about two good banks coming together, trying to take advantage of scale and improve profitability. But it was a surprise because I think our view was that they both could be buyers, not necessarily merger of equal candidates.
And as well,
but I think scale is the first point.
Absolutely, because especially in the digital age, you need that to compete with the nation's largest bank. So Wilf mentioned that U.S. Bank, which is number 5, may not have quite as much bandwidth to grow because of the regulatory burden. What are some of the names, further down that you think look like they're in the same position to maybe pursue these mergers of equals?
Well, I think so. What's been interesting since Dodd-Frank was passed is that there were these regulatory thresholds for where more regulation was going to be imposed on the companies because of their size. And there's a $250 billion threshold right now. So I think that banks will cross that 250 carefully. And in this particular case, both banks were already above the 250, so they're already doing the stress test. So they had some room to come together. I think if you look at it by segments, you'll see the above $250 billion banks that are already stress testing being maybe a little bit more friendly towards adding. And then there'll be other banks below who will prefer not to go over that 250 with consolidation.
So, Tom,
but I think it's going to happen up and down the whole spectrum of assets.
Well, that's what I want to sort of talk about, because I've heard for many, many years the story of consolidation. It certainly has been the fact. And when you look at some of the mid-sized regional banks, you can absolutely see the reason why, because those big guys like Chase and Bank of America and Wells Fargo are coming into their markets and they have to compete. But I am also very struck by the fact that every few weeks I seem to notice a brand new bank popping up on a street corner in my town, in northern New Jersey, wherever. So it looks like the little guys are actually being able to sprout relatively comfortably. Talk about that.
I think it depends where you are. So you live in New Jersey, which is a very dense market where there are advantages to having branches. But the reality is across the nation, branches peaked about the time of the start of the crisis, just before it. And there's actually been a decline in branches. And what's even more interesting is you'll see the biggest banks in the nation are opening branches in metropolitan areas and tend to be closing them in suburban and more rural areas. So they're remixing their branch structure, and they're using technology and digital features to connect with their employees.
Well, yeah, I agree. I see branches closing of the big banks. I see Chase closing down some branches or making them smaller in my town. But what I'm talking about are brand new banks that I've never heard of that seem to sprout up.
I think the ones that you maybe have not heard of are banks from other areas looking to get into the New York City metropolitan area, because there really has not been a lot of new bank formation. There's only been a handful of new banks started each year, which is down from the prior run. So it really depends upon where you live that I think is making a big difference. But there are a lot of interesting features with this merger. I'll tell you, one of the things we're talking about is by having these two big banks combined, they could be successful in their merger, but it still could be a great environment for local regional competitors like a Pinnacle Financial, a Union Bank Shares, a Center State, a South State. These are all banks that are in the core markets that could get a short-term boost because of this merger, because of some of the dislocation.